Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today I'm going to be talking about the IRS collections process. All right. At the time of this recording, it is May. And so what happens is that it's between the May to July timeframe that people who owe the IRS start getting letters, because the way that the IRS processes tax returns, they process the refunds first and they deal with the liabilities second. So this is why the letters don't start coming until, really about June is when the bulk of the letters get mailed out. And but that's why, that happens. So, and you'll also see the commercials start to ramp up on TV about if you owe $10,000 or more, blah, 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 call us now. We'll get you settled for pennies on the dollar. You'll start seeing more of those commercials on TV because this is the time of year that people start getting the letters. All right. So I want to go through a brief overview of the whole collections process, because there are going to be a lot of people that are going to get letters from the IRS that are going to be freaking out. And so I hope that, you get this video, definitely want to ask you to share this one out. You get this video to kind of understand the process of how things are going to happen. Okay. Now, the other thing that I will say before I get started is this: ignoring the letters, ignoring the IRS does not make it go away. Okay. If you get any type of letter with the IRS on it, the first thing you want to do is open the letter and read the letter. Okay. Getting a letter and not opening it, saying, okay, well, if I didn't open it, then I didn't receive it. That does not work. Okay. The IRS keeps strict records of the letters that they send to you. And if they have to show up at your job to make sure that you have this letter or whatever, they will most certainly accommodate you for that. Okay. They will show up at your job, at your home, your place of, if you own a business, they'll show up there too. Okay. So, this is not something that you want to play with. Okay. So, so the process is, it's part automated and, it's part human intervention. Okay. The beginning part of the IRS collections is completely automated. And, one of the things that I tell people is like, people are like, oh my gosh, the IRS has less funding. Yay. Right. No, that means that the automation is going to increase and there's going to be, less human involvement, more automation. All right. So the first thing that if you owe, okay, you file your taxes, okay, like I've told you 1,000 times, even if you know you're going to owe, you definitely want to file anyway, because then you won't have to deal with the failure to file penalty. You'll have a failure to pay penalty, but you won't have a failure to file penalty. Okay, so that's just one penalty you won't owe. All right. So once you file your taxes, and then if you owe and you don't pay them, you're going to get a letter. It's called a CP-14 notice. Okay. And this is a letter that tells you how much you owe and along with any penalties and interest that you're due. All right. So you definitely want to read that. And it also, all of the IRS letters that you get come with instructions. So you definitely want to read the letter because it comes with instructions. So the CP-14, it tells you, that you owe and the amount of penalties and interest and the next steps to resolve it. Now, if you don't do anything there, if you don't call them or anything like that, then you're going to get a CP-501 notice. And that notice says, hey, we sent you a letter before letting you know that you owe this amount. This is the penalties and interest. Okay, so now we're sending you a reminder to say, okay, maybe you flaked out, but you still owe this money. So we're just sending you a gentle reminder. All right. So then if you don't respond to that one, then you get the CP-503, which is the, look, we ain't playing with you. You owe us this money. We already sent you the first letter. You didn't respond. We sent you a reminder. You didn't respond. Okay, now we reminding you one more time, but we ain't playing. And so then if you get there, then you will get the CP-504. That is the look. we tired of talking. So now that is the notice of intent to levy. That is when they start coming after your other money. Okay. Like your bank accounts and other tax refunds and all of that. So you get these letters and, any type of refund, whether it's a state refund or, future federal refunds, those are going to be held to apply to that tax debt. Okay. So, then, after you get the 504, then you get the 1058 letter, which is the intent to levy and your right to a hearing. So you have rights in all of this. Okay. But you don't really get to exercise your rights if you never open the letters, read the letters, do what the letters say. Okay. One of the things that I get a lot, and it just popped into my mind, I want to address it now. People like, okay, oh my gosh, I'm going to go to jail for not paying my taxes. We don't have a debtor's prison in the United States. Okay. If you have filed your taxes and you can't pay your taxes, you're not going to jail. You only go to jail when you do illegal stuff like tax evasion and trying to hide money in foreign accounts overseas and all of that. Those are jailable offenses, just, flat out just not filing your taxes. And, all of that, comes up to tax evasion and doing illegal stuff. All right. So if you file your taxes and you owe and can't pay, you don't go to jail. But if you just blatantly disregarding the requirements to file and, not reporting income and all that, those are the things for which you go to jail. All right. So if you do all the things that you're supposed to do, the IRS is not trying to lock you up. And that's by and large, because if they lock you up, they're not getting their money. But even if you do get locked up, that tax bill is still going to be waiting for you when you get out. So just know. All right. Now, okay. So then there are things that you can do as well. So we're talking about different types of payment options. There's lots of different options when you owe the IRS, but understand that if you have not filed your taxes for the last 3 years, they're not going to be willing to work with you at all. No. So first thing you have to do is make sure that you have all of your taxes filed. And, and it can be costly if you have not done this in a while. That's not going to happen for free, just to let you know. Okay. So if you can't pay, then you look for, different options. There's the installment agreement. There's the offering compromise. There is, a delay. You can actually apply for an extension to pay, and that extension to pay, you're still getting penalties and interest. However, you're still in good standing with the IRS in paying your taxes. So we talked about the offering compromise, the streamlined installment agreement, the traditional installment agreement, and I'll talk about these on another broadcast. All of that is just too much right now. I'm just letting you know what exists so that you can make some better decisions. There is a delay for collections. Now I'll stop here for a moment because you know what? Sometimes, you get to that point and we're talking about you've lost your job or had a serious reduction in income or something like that to where you really can't pay. And so what am I talking about? So let's say that you had a 6-figure sales job and then you had somebody lay off their entire sales force. Then that 6-figure sales job is gone. And so if you have a tax bill and you're not making that 6 figures anymore, then no, you can't pay, right? But you have to inform the IRS of these things that are going on. The one thing that I will tell you in all of these processes with the IRS, if you keep in contact with the IRS, then they're going to be willing to work with you. It's when you decide to ignore the IRS, think they're going to go away, that you force the IRS to then to carry out their legal processes. That's what they have to do. That's the law. So you definitely want to stay in contact with the IRS with any changes about your income, your living situation, anything like that. Now, the other thing is that, people ask about, these commercials on TV that talk about, they see the commercials, the couple sitting there all happy. Oh my gosh, we had $100,000 in debt and we settled for $500 and we're so happy. Yay. Okay. So let me just say this to you. You're not going to be sitting up in $1 million house with a whole bunch of equity and a retirement accounts with a whole bunch of money sitting in there and having a bunch of tax debt and not pay it. That's not how the IRS gets down, okay? So when you see these commercials, understand that, somebody's got that amount of debt and it's settled for a small amount. There are no assets involved. That means you don't have a home. You might rent. You might have a roof over your head, which is cool, but you're not owning property. You're not, having, like I said, your retirement account sitting there just growing money and life is good. No, that's not how that works. So I definitely want to clear that up. And then, dealing with liens and levies, as you really just want to avoid getting to that point as much as possible, because then that is going to then hinder you from doing other things. So if the IRS places a lien against a home that you own, then what that tells other lenders and everything is that the IRS says, hey, when that house gets sold, we get our money first, y'all get what's left. And so then that, it really makes creditors and lenders hesitant to loan to you because they know that they don't have first dibs on that property if you don't make the payments. So liens and levies, that really can get, you just don't want to get to that point if you can avoid it at all costs. Okay. So that's really an overview of the process. The other thing is this. If you have a tax debt, the IRS has up to 10 years to collect a tax debt from you. And that's just at the federal level. The states, they have different collection statutes, okay? There are some states where it's 15 years. There are some states where it's 20 years. There could be more. It could be less. 50 different states. 50 different rules, but on the federal level, the federal government has 10 years to collect a debt from the date it is assessed. Okay. So if they find out here in 2018 that you had a debt that, you didn't file taxes back in 2012, okay, then they have until 2028 to collect that debt. So this is why you want to file, because if you never file, there's no statute of limitations on not filing. All right. So just know that. Okay. So that is a brief overview of the collections process. There are different timetables and such involved, and we'll talk about those. But just know that you also, as a taxpayer, have rights, but you need to know what your rights are and what kind of timetables that you're dealing with so that you can stay in compliance as well. Okay. So, I hope that helps you out. Just kind of get an idea of the collection process, and that, the main thing that you want to do is when you get the letters from the IRS, you want to open the letters. If you have to get help, get help. Okay. You can hire someone that's like me, that's an enrolled agent. You can hire a CPA, you can hire a tax attorney, but you need, if you need help, you need to do that so that you can deal with this properly and not, like I said, go further into the collection process with liens and levies and all of that stuff. All right. So I hope this helps you out, gives you a little bit of helpful information. And that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here and get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.